Welcome everyone to Tradeview Markets Forex Division. My name is Jose Ricardo Tejaen, and today we're going to go over what happened, where we are, and what probably might happen next week in the currency markets. Please, before we start, remember that all the video information is for content and educational purposes only. It does not constitute financial advice nor an invitation for you to buy or sell any asset. Also, at the same time, we want to take the opportunity to talk to you about the offer that we have as far as trading platforms. We start with CTrader, a very elegant platform introducing the concept of market depth. Will actually allow you to have a competitive edge when you start trading. It allows you to have the different volume per level when you are about to trade. Also, MetaTrader 4, it allows you to have more time using the functionality auto trading. And finally, for those of you ready to become professionals in the currency markets, we do have CurrentX, allowing you to have access to prime liquidity, more than 60 institutions between banks and prime brokers. Now that we're ready, let's begin. Let's start a little bit with what happened this week, and we're going to go with the debacle of the Russian Rubble that actually went all the way down to levels back to 2016. And there's a mix of information between the US sanctions and also the Syria tensions. And it's very important to keep an eye on this because a lot of people feel that this is just another game between the Trump administration and the Kremlin. But what we have here is probably a game changer. And we're going to go to the charts right now. I'm going to share with you on the description of the video. We'll have the section for all information regards this article from the Moscow Times. But I want to take a look directly at the charts. I'm going to here have the MT4 Tradeview Markets allowing you to trade the Russian Rubble, USD versus RUB. And very important, take a look at this spike. Massive pressure on the weekly chart all the way from 57.97. We have all the way to 65. What we have to consider is exactly what is going to keep happening if this tension is in place. If we take a look at crude oil, we have it at 67, and I'm just going to give you an idea with Fibonacci what you should be looking at. First off, you have the 100 exponential moving average, and very important, strong resistance to consider is the 70, and then eventually we'll have all the price action going to the 61.8%. Always keep in mind when it comes to Fibonacci, you do want to pay attention to the 60.8% and the 30.2%. This just in the middle is just another line. A lot of traders, retail traders, they want to focus on this one, but these two, 61, 38, are the ones to keep on the table. Also keep in mind that for 2018, Goldman Sachs, they previously had a target at around $80 for crude oil, and also one of the things we had on the news wire this week, Barclays upgraded their crude oil forecast by $3. So all things equals, what we're looking here is just a probably higher prices for 2018. Now, of course, as we know, prices can do this in the long term. They need to be efficient, so we might easily have, just going to have it here, we have a combination of this price action, then a pullback to attract more buyers, and eventually a push all the way to the 61.8%. Factors, variables that you have to keep an eye on. You want to think about the tensions, trade wars, all this combined, and of course, don't rule out declaring more of the action from the U.S. in Syria. Then we will see easily a crude oil going all the way up to $80 in 2018. We go back. I'm going to take a look at a couple currencies this week. The ones that they've been winners, if you pay attention, Yen crosses. I'm going to start, of course, one that hasn't moved that much, but if you pay attention, we're going to add a 50 pure exponential moving average. We have a bottom so far located here for the US dollar versus Japanese yen. went on 104.56 as usual, the level 50 that we have discussed in other videos, very important level, and this continuation on the month of April, all the way recovering more than 250 pips. We do expect some resistance around 108.70. That's a very important level, but the same risk of environment has been of value for crosses like the Great British Pound against the Japanese Yen, which now finds resistance at the 50 period exponential moving average on the monthly chart. Very important to keep an eye on what is going to happen from this point. If we were to consider that this is a relatively very strong resistance, we may look on the weekly chart for a pullback all the way to the 150.80 zone, just to keep an eye on these crosses. One more cross that we want to take a look, and the reason why we share this particular cross, Canadian dollar versus the Japanese yen, as we said before, looking at the price action in oil, if it keeps rising, there's no doubt it will start challenging the 86, which is again on the weekly chart is the 50 period exponential moving average, which is around 86. Now, if you take a look at the monthly chart, you will have a lot more information. Actually, Morgan Stanley, just to keep an idea of what other investment banks are doing, Morgan Stanley had a call. They were targeting 84.50. And as you can see, during the month of April, if we take a look here at the levels, the low of the month was 81.61, and the high so far 85.73. So the trade worked out pretty well for Morgan Stanley, especially because their stop loss was placed at 80.40. So that's something to pay attention when you're looking to trade ideas from investment banks. Of course, this will find a massive resistance at 87.23, and one more, in this case, US pairs before we finish, that is challenging the 50 period moving average on the monthly chart. Of course, the Great British Pound versus US dollars, GBP versus USD, and we have to think about what ING is saying. They are still targeting the 145. That will be looking to pass this previous level, the 143. If we look at here, let's see, we can push it 143.43, which is the high of 2018. So this is very important based on historicals. We have no doubts that there's a probability on the table that by next week the Great British Pound will trade near the 145 target.